The trader's mind. Understanding trading psychology. Trading psychology is the study of how our minds work while we trade. It explores the emotions, thoughts, and beliefs that influence our decisions in the market. Just like athletes train their bodies, traders need to train their minds for success. Trading psychology helps us understand why we make certain choices, especially under pressure. By understanding our psychological tendencies, we can make better decisions and improve our trading performance. Think of it this way: trading is 50% strategy and 50% psychology. You can have the best trading system in the world, but if your mind isn't right, you won't be successful. Trading psychology is about recognizing and managing the mental and emotional aspects of trading. It's about developing discipline and mental toughness, so you can consistently execute your trading plan, even when things get tough. The invisible hand. Why trading psychology matters. Trading psychology is crucial because markets are unpredictable. We can't control what the market does, but we can control how we react to it. Our emotions can help or hurt us in the market. If we let our emotions dictate our decisions, we're likely to make costly mistakes. Fear and greed are two of the most common emotions that can sabotage our trading. Fear can make us hesitate when we should take action, while greed can lead us to take unnecessary risks. Trading psychology helps us recognize these emotions and develop strategies to manage them effectively. By understanding our psychological biases and tendencies, we can avoid making impulsive decisions based on emotion. Emotional roller coaster. Fear, greed, hope, and regret in trading. Emotions play a significant role in trading, often leading to poor decisions. For example, fear can paralyze us, preventing us from entering trades at the right time or exiting losing positions. On the other hand, greed can compel us to chase profits and take excessive risks, ultimately leading to significant losses. Hope is another dangerous emotion in trading. When a trade goes against us, hope can make us hold on for too long, expecting a reversal that may never come. This can turn a small loss into a devastating one. Regret often follows hope. When we miss a profitable trade, we may feel regret and make impulsive decisions to try to make up for the lost opportunity. Conquering fear. Develop a fearless trading mindset. Developing a fearless trading mindset doesn't mean being reckless. It means acknowledging your fears and developing strategies to manage them. This includes understanding the source of your fears. Are you afraid of losing money? Are you afraid of making mistakes? Once you've identified your fears, you can start to address them. This might involve adjusting your position sizing, so you're not risking more than you're comfortable with. It could also mean developing a trading plan and sticking to it, even when you feel afraid. Remember, fear is a natural human emotion, but it shouldn't control your trading decisions. Section 5. The power of discipline. Master your emotions for trading success. Emotional discipline is crucial for trading success. It's about controlling your emotions, not letting them control you. This means sticking to your trading plan, even when you feel scared, greedy, or hopeful. It means not chasing profits or trying to make up for losses. Discipline also involves patience. Successful traders understand that trading is a marathon, not a sprint. They're not looking to get rich quickly. Instead, they focus on making consistent profits over the long term. Developing emotional discipline takes time and effort. It requires self-awareness, practice, and a commitment to continuous improvement. Section 6. The Learning Curve. Why studying trading psychology is crucial. Many traders focus entirely on technical analysis and market indicators, neglecting the psychological aspect of trading. However, understanding trading psychology is just as important as understanding charts and patterns. It provides you with insights into your own behavior and helps you identify your strengths and weaknesses. By studying trading psychology, you can learn to identify your emotional triggers and develop strategies to manage them. You'll also gain a better understanding of market psychology and how crowd behavior can influence price movements. This knowledge will give you an edge in the markets, allowing you to make more informed and rational trading decisions. Section 7. The Trader's Mindset. Shape your perspective for consistent profits. Developing a winning trader's mindset is about cultivating specific psychological traits that contribute to long-term success. This includes developing a positive attitude, even when facing losses. Losses are part of the game, and a winning trader sees them as learning opportunities rather than setbacks. Objectivity is another crucial trait. Traders need to be able to objectively analyze the markets and their own performance without letting their emotions cloud their judgment. Finally, a winning trader has unwavering self-confidence. They trust their analysis, their trading plan, and their ability to make sound decisions. Section 8. Building mental fortitude. Practical tips for beginner traders. For beginners, several practical tips can help strengthen their trading psychology. Start by defining your trading goals. What do you hope to achieve through trading? Having clear goals provides direction and motivation. Next, develop a trading plan that outlines your entry and exit points, risk management strategy, and trading style. Practice risk management. Never risk more on any single trade than you can afford to lose. Keep a trading journal to track your trades, analyze your performance, and identify patterns in your behavior. This will help you learn from your mistakes and make better decisions in the future. Section 9. The Journey Within. Continuous self-reflection and improvement. Mastering trading psychology is an ongoing process. It requires continuous self-reflection and a willingness to learn and grow. Regularly review your trading journal, analyze your emotional state during trades, and identify areas for improvement. Consider working with a trading coach or mentor who can provide guidance and support. Remember that becoming a successful trader is not just about learning technical skills, but also about developing the right mindset and emotional resilience. Section 10. The Winning Edge. Trading psychology is your secret weapon. In the competitive world of trading, psychology can be your secret weapon. While many traders focus on technical analysis, mastering your emotions and developing a strong mindset can set you apart. By understanding and managing your psychological responses to market fluctuations, you can make more rational decisions, avoid costly mistakes, and achieve consistent profitability. Remember, trading is not just a battle against the markets, it's also a battle against yourself. By mastering your emotions, developing discipline, and cultivating a winning mindset, you can gain a significant edge and unlock your full potential as a trader.